What's up everybody? Welcome to the Stocks channel. My name is Cory, and in today's video we're going to take a macro level view at the stock market and try to determine if the stock market is too overbought to continue to head higher. Before we get into the charts, please help me out by smashing that like button. And if you're new, go ahead and subscribe so you can follow along with all of my daily updates. First up, we'll take a look at the S&P 500. So let's crack open this chart and see what's going on in the stock market today. Alright, first off, let's go ahead and take a look at our bear bull survey. We can see that we did lose some bulls over the last week, and we're down negative 11.5% on the bull survey. Now, we did gain, the majority of the people went to neutral, but there is 1.5% that went back to bearish. So the one thing to take away from this chart is we are in a market that has more historical average bulls, where the historical average is 38% and we have 44% bulls, but there still is the majority of the cash in neutral and bearish. So there still is enough cash on the sidelines, or enough cash trying to short this market, where the market does have enough fuel to continue to head higher. The one thing you want to pay attention to on this survey is as the bullish percentage goes way too high, there's just too much money in the market, and it's not likely the market can continue to go higher without some significant correction to pull some of those bulls out of the market and go back to neutral and bearish. So right now, this is a bull survey for sure, with the majority being in the bull camp, but there still is quite a few people that are neutral and bearish. So looking at the S&P 500, we're going to take some time looking at a weekly chart. And the first thing you need to know to understand what we're going to look at today is where these trend lines come from. So we have two trend lines on the chart, one being purple and the other being a magenta color. And you need to understand where these trend lines came from to begin with. So the magenta trend line takes the low back from 2009 and the high up in 2018. And then the purple trend line takes the high of the market from 1987 to 2000. So those are only 2 points connecting to make these trend lines, and they have been very important trend lines in calling the market top. So let's focus in on the magenta trend line first, and we could see in January of 2018, we came right up to this trend line, failed to break above it on a weekly close, and then went into a huge correction and never came back to that magenta trend line for many years to come. Going back to February of 2020, when we had that huge bull run that took us all the way back up to the magenta trend line, again on a weekly close, we failed to break above that trend line, and it was followed by the March crash, which I'm sure you all remember. Then going back up here to August of 2020, we came back up to the magenta trend line and failed to close above it. In September, we were trading above the trend line, but you can see on a weekly close, we actually closed much lower, and that led to another correction. And that brings us to last week, where we finally broke above that magenta trend line and had a closing price above it. So you can see that last week was very significant, and that was a close above a trend line that has never had a weekly close before. So by definition, that is bullish. When you break above a trend line that has been acting as resistance, that is called a breakout. So right now we see we did close back below that trend line, but we're still trading above the purple trend line, which is the 87 and 2000 highs. So you can definitely see that the S&P 500 is trying to break out of this critical level, and it's trying to form new highs to bring this market into another long bull run. So now that you can see the significance of those trend lines and how significant it is that we finally got to close above those levels, I want to pay attention to the price action and the trends that we're seeing on the weekly chart. So you can see that we're still in a very strong bullish trend. All of these moving averages are sloping to the upside, and this is on a weekly chart, so this is a strong trend. And the 5 EMA is still breaking above the 13 EMA and continuing to trend higher. The price action is still above the 5 EMA, so we have good price action for the bulls and a very strong bullish trend, and we're starting to close over decade-long resistance trend lines. Another thing I want you to pay attention to is look at the Bollinger Bands. We're trading near the top of the Bollinger Bands, and they're starting to slope to the upside. Even the lower Bollinger Band is coming up with a very aggressive upward slope. So the Bollinger Bands are telling us that the stock market is in a strong trend mode and it wants to go higher. If we scroll out a little bit and go back to 2017, we could see a very similar scenario where in 2016 the stock market had a nice pullback and the market really just started running. The Bollinger Bands were open pretty wide at the beginning of 2017, but then they started sloping upward and trending up with the stock market, and we can see that the price action just held the top of the upper Bollinger Band, and we stayed in that 5 EMA over that 13 EMA bullish trend, and we can see all of the moving averages were stacked to the bull side just like we see today. The market continued to run higher, and then eventually we did start going away from this 45-degree angle incline, and we started melting up all the way up past the upper Bollinger Band and you can see that the market just went too far too fast and it needed to cool off. So if we compare what we're looking at from 2017 to what we're looking at today, we can definitely see a scenario in 2020 in February where we started to get away from that nice 45-degree angle slope, started melting up, and that led to the crash in March. You could obviously attribute that to many things, but technically speaking, the market was due for a correction after we got in that aggressive melt up phase. Now you can see ever since the crash, the market has gone up very far, very fast, and that led to this correction that we've been in, and the price action really hasn't gone anywhere in the last couple of months. So if I draw a box around that price action, you can see the market's basically been going sideways since we had that melt up in August where we went too far too fast and the market just needed time to cool off. Now you can see we're definitely breaking out of this box, and it's very clear that we have 2 weeks where we've closed outside of this range. That is bullish when you break out of a consolidation, because normally a consolidation will break to the upside or the downside. And if you're looking at this chart, it is very objective to say that we broke out to the upside of this consolidation and we now have 2 closes in 2 weeks time above that consolidation. So we can definitely see the case where the bulls are breaking out and they're getting ready to drive this market higher, and we're gonna start seeing some upward trending. There's no doubt that the trend is bullish, and there's no doubt that we broke out of this consolidation to the upside. So another thing I want to do is I want to go ahead and throw on RSI on this chart, and you can also see trading up here. Normally one thing you would want to look at is, are we overbought and is there more room for the market to run? And you can see based on the RSI down here, we are not overbought on the RSI. And even if we were overbought on the RSI, if we go back to 2017, you can see that the RSI varies drastically throughout 2017, where we were overbought at times, but the market just cooled off for a week or two and we continued to head higher. So the fact that the RSI is not overbought means that we're not even in a scenario where we need a technical sell-off. You can see that the RSI is well within the range between being neutral and overbought and oversold. We're definitely closer to the neutral RSI, where there's no technical reason that the market needs to sell off because we're not overextended. We're not above the upper Bollinger Band, and we're not overbought on the RSI. So looking at all of the objective data, looking at the breakout out of the consolidation, looking at the price action above the 5 EMA, and looking at the bullish trending with all of these moving averages stacked to the bull side and trending upward in a very strong, reliable fashion, you can see that these moving averages have not been phased and the market just continues to trend higher. So the fact that we're breaking above critical trend lines and we're continuing to show strong bullish price action tells us that the market is likely to head higher. That is strictly looking at objective analysis and not factoring in any noise or any news around us. We're following the price action and we're following the trend, and it's telling us that this market is still bullish. If I flip over to a monthly chart, we can see that we also are not overbought on the RSI. We have bullish price action above the 5 EMA, and we still see all of the moving averages are stacked to the bull side, and we're seeing some strong trending. Now on the monthly chart, you can see in August we did get overextended from that upper Bollinger Band, and that did lead to a 2-month cool off. So when the market goes too far too fast, it is likely that we will see a cool off. But right now we're trading near the top of the Bollinger Band and we're not overextended too far past, and we're going to get a new month in December soon, and these Bollinger Bands will continue to expand, and it's going to give this market more room to run. You can see that the market can ride that upper Bollinger Band in a bull market, and you see that in 2017, where every single month the market was right up against that upper Bollinger Band and it just continued to melt up and run higher. Eventually, if it does close way above the upper Bollinger Band, that will lead to corrections. So right now it's not too concerning. We don't look too overbought, and the market looks like it's still in that strong bullish trend mode and it wants to continue to head higher. So I want to also take a quick look at the Nasdaq 100 NDX index. And we can see even on the Nasdaq 100, the price action remains closing above the 5 EMA, and we still have strong bullish trending. You can see the Bollinger Bands on the NDX are also sloping to the upside, and they look like they're going into trend mode. You can see the RSI is not overbought, and the Nasdaq 100 is still in this consolidation wedge, getting ready to break out to the upside or the downside. We saw the S&P 500 looks like it already started to break to the upside, so it's likely the Nasdaq 100 is just in a different cycle and it's not ready to break out just yet. However, when it does break out, it should have a lot of room to run because we'll be coming out of this significant consolidation period where if I draw a box, you can see that the price action has still not had a breakout. If we do start breaking out on the Nasdaq 100 and climbing to the upside, that's going to help the S&P 500 as well, because over 30% of the S&P 500 is the technology sector. So we can definitely see bullish price action and bullish trending even though we're still in a sideways consolidation. But we know that that can change at any time, and if the Nasdaq 100 starts trending and breaking out of this, we're likely going into another long bull market. So let's jump over to a monthly chart on the Nasdaq 100, and we can see that we're also not trading at the top of the Bollinger Band just yet. We still have that price action above the 5 EMA, and all of the moving averages are very bullish, sloping upward and stacked to the bull side. The RSI is not overbought on the monthly, and we have room to run between the upper Bollinger Band and the price action to continue to climb higher. So we're still looking at this 12,750 level as a possibility for the NDX to get to very soon. The trending is strong, the price action looks good, and the RSI is not overbought. You can zoom out on this chart and you can see back in 2016 through 2018, we just continue to close above that 5 EMA and continue to grind higher in this bullish trend. So if you're bearish on this market right now, you're not being objective and you're not looking at the price action in the trending. It's okay to be cautious in this market and start putting some cash ready to buy if we start dipping, but there's no reason to try to be shorting or try to be calling a top on a market like this. Just let the trend help you out because the trend is your friend. And if we're looking at this trend, we see no bear reasons to try to short this market. If you're over leveraged and you're too long in this market, I always suggest you have some cash ready to buy or ready to trade in any event that we actually do start getting a sell-off. But trying to predict a sell-off is not the right way to trade the stock market. Follow the trend and let the price action drive your decisions. So I just showed you the S&P 500 and the Nasdaq 100 indexes from a more macro level view and showed you why they're not too overbought and why they can continue to run in this bull market until we see some technical signs that it's not likely to continue. Eventually the bull market will come to an end and the price action and the trend will tell us that that bull market is ending. But until we see that data, we're going to continue to remain objective and we're going to continue to be bullish on this market. As you can tell, I don't factor in any noise like news and politics. So if you like that and you want to follow technical analysis that's strictly objective and follows the data, go ahead and subscribe to my channel because I do daily technical analysis on the stock market in this objective manner. If you enjoyed this video, please let me know by smashing that like button. Thanks for watching, everybody. I hope you enjoyed this special weekend update. And as always, I will see you in the next episode.